Okay, folks, this is Jim Primson. Today is a great day. I think last time I met with Fola Badewa, mortgage advisor. We spoke about so many things, and she is here again to explain a whole lot of things to you guys. We are going to talk about home equity.
Yes.
A lot of people own properties.
Yes.
They own commercial, residential.
Yes.
They've lived in it for so many
So
years,
long, absolutely,
and
yeah.
still they don't even know exactly what they are losing, right?
Yes,
They don't
absolutely.
really pay attention to their equity.
Yes, absolutely.
So I'm glad you are here today
Thank you.
to explain to them. This is not about first-time home buyers.
No.
And it's not about anything. It's about
Yes.
anyone who is interested, who own a house,
Yes,
and then
absolutely.
interested in, how to use their home equity, or they want to understand.
Yes.
So before that, like the video, forward it, and share with your
Yes,
friends.
Thank you.
And then Fola is a very good loan officer in the Twin Cities.
Thank you.
She has done a lot of
Thank
loans.
you.
She is the only loan officer in the Twin Cities that, I like
wrote a
the book. Yeah,
Did you read it?
Oh, I did.
Okay.
It's really good book. So if you are interested, hey folks, just order one. Feel
Yes.
free. It's
Yes.
free.
Yes.
You are not going to buy. You
Reach
don't
out.
pay anything.
DM.
Reach out.
You get one. You get a copy.
You'll get one. So this program is about home equity, right?
Yes, correct.
So you want to talk to the people,
Yes.
the audience.
Yes.
I feel like you know a lot, and actually, if I ask you what is home equity, it's something, but I need to ask you.
Yes.
So, what is home equity so far?
Okay. All right. Thanks again, James. I love watching your show and everything, your podcast. Thank you for having me here again.
Yeah, it's it's community awareness,
Yes,
so
absolutely.
we try to make sure that we let the community know what
Educate. It's all about education.
Yeah.
So welcome again, everyone. My name is Fola Badewa, mortgage advisor in the Twin Cities for over 2 decades. It's always my joy to help families build wealth through homeownership. And today, James wants us to talk about home equity. What is home equity? First of all, I will tell you folks that are watching, this is for homeowners. You own your own home. People always think, oh, I own my own home. They're not what? They don't even know there's anything else after that, can help them to continue to accumulate wealth through homeownership. Most people just keep their own equity in their home. They don't even, they don't seek advice. What can I do with this? What does this? So that's why we're here today to talk about different part of, how you can continue to accumulate wealth with your home. So the first one, definition of home equity is the difference between the value of your home and the mortgage balance that you owe. That's the difference. For example, if you own a $500,000 home, that's your home's value, and your mortgage is $300,000. The difference is $200,000. That is your home equity that it has built. And it surprised me, many people don't know how they can access it, what they can do with it, and that's why we're here to talk to you today. So number one of how you can tap into that home equity. So we call it home equity loan. Well, if you hear HELOC, is the same thing. And also there is home equity line of credit. So how to access this is you come to a mortgage lender, mortgage advisor. I can do that for you for sure. And what we will do is when I'm sitting in front of you and say, okay, I've owned my home for 10 years. Okay, my home is worth 500,000. I have 300,000 balance. 200,000 is the difference. So you can take out 85% of the of 500,000. So that's what you can take out. So do you have a calculator here? 85% of 500,000. So James is gonna be my crunching numbers there.
Let me check it here on my phone. Just to make sure I have it correct. Yes. It said 500,000.
85% of 500,000. I'm sorry, we use a lot of calculator. I had to rely on that. So when you're sitting in front of me, I will tell you that's how much you can take out. And what's the process? It's the process of getting a mortgage, but without the exchange of properties.
That's 290. 290.
290 is 85%. I don't know.
Or maybe I don't know.
Let me do it really quick.
Yeah, do it.
Let me do it really quick. So 500,000
times 80.
So 85% of that is $425,000 is 85% of 500,000.
So if the person can get a whole amount, 85% of that 500?
Yes, they cannot get the 100% of their equity. They can only borrow up to 85% of the value of the home. So in this case, 500,000 is the value. You hold 300,000, and you can get up to 425,000. So that means in this scenario, we can get you home equity line of credit of $125,000.
Oh, okay.
Because lenders want you to still keep some of your equity in your home in case maybe you decide to sell the next year. They still want you to have, some funds that you can access. And, a lender think it's a risk to give you all your money, because people have done it before. They took all the equity and they flee, and they let the house go to foreclosure because they're like, oh, I've already took it, I took all my money out of this house, so I don't need this house anymore. I already have my money. So that's why lenders do not want you to take 100%.
So let's assume if someone own a house that is worth 500.
Yes.
As you said.
Yes.
And then the mortgage on it is just only 100,000.
Oh, okay.
How much can they take?
So if it's 100,000, can you open it up? Okay. So it's then gonna be 85%, which is 425. Mm-hmm. So in that case, they owe 100,000, so they can take $325,000 out.
Oh, they can take
325. They can take up. So their main mortgage and the equity line of credit have to be equal to 85% of the value of the home.
Okay.
Yes.
Okay.
So using 500,000, 425,000 is 85% of 500. So whatever you owe, the difference can be taken out as line of credit.
Oh, okay.
Yes. So, Yep, that is the way it works. And you can tell me, okay, now I want to take my home equity out. What do I need to do? You need to have good credit to take your home equity out. You need to have income to take your home equity out. Those two things must be in place. If we put your credit at is like 500 and something, we will walk you to, we will help you repair that credit. We will not be able to do it right then and there because you need good credit. At least I will say 680 credit score to take equity line of credit, because the bank, they want to trust you that you're not going to take this money and flee. That is somebody that have good credit. Is someone that have income that want to take this equity out, because it does have a monthly payment as well. The home equity loan, home equity line of credit, they do have monthly payment. So they're separate. This is your mortgage, this is your home equity line. So it's very similar to a giant credit card. So let's say you have a credit card that has 50,000. If you don't use it, you don't pay anything on it. Same thing. You can take out 100,000, but you're like, I just want to take it out right now. I don't have a need right now. You will not have any monthly payment on it.
Okay, so let's assume I want to take $80,000 for my home.
Yes.
As compared with credit card.
Yes.
Which one is the best? Is the credit card?
Yeah, that's a very good question. Mm-hmm. So it's own equity line of credit, that's the best. And the reason is that all interest you pay on it, they're all tax deductible, number one.
Oh, really?
The tax deductible, just with your mortgage, as your mortgage is. Number two, the interest rate is so much lower than credit card. Credit card right now they're in the 20s, 21%, 20%, 18%.
Currently, even it's 28%.
I know. Just imagine 28%. Your own equity line of credit, you can get it between 8% and 9%. In between that.
So do they have to call? Let's say if someone takes the money at the end of the year, they have to contact their lender for the interest paid, or
yes, the lender will actually send it. Just like you receive your mortgage interest statement, you will receive that home equity line of credit interest statement as well.
Oh,
so it's automatic. They will mail it to you.
So
you use both to file your taxes.
Oh, okay.
Yes.
Okay.
So
wow. I remember a guy called me some time ago and said, "Oh, Mr. James, how much money do I have on my house?" I said, "What? How much money do you? I think I have money in my." And then I said, "I don't know. Is it home? Are you talking about home equity or what?" And then he said, "Oh yeah." Said he didn't know. The reason is, he said he was working with somebody, and then the person was trying to advise him about taking money. He needed to repair his siding.
Okay.
Repair his siding and deck.
Okay.
And then he was struggling to get money to do it, and he didn't want to go to bank to get another loan. So he called me and said, "Oh, Mr. James, how much do I have in my house? Do you know?" And then I said, "In fact, I don't know how much." Meanwhile, this individual has lived in the house almost about 12 years. They didn't know anything about it.
Good money. Yeah.
So I asked him, he went to one of the credit union, I think Wins Financial, one of the credit union, and got $85,000. Wow. That was about a year ago. Yeah.
Yep. That's amazing.
To do it. So home equity is really, really.
I'm going to talk really briefly about, okay, why should I take my money out? Why should I take that home equity out? The reason is so that you can continue to accumulate wealth. So one way, you can take that money out and use it as down payment on an investment property. So that way, that money is growing, your current home is growing, so that's a way to continue to build wealth through home ownership and continue to to have more properties in the way that you don't have to struggle. Take the money out, buy down payment and closing costs, and then couple years again you can do it again, because your home continually accumulate wealth. It doesn't stop. And right now in the industry, I don't think we're gonna have any crash or anything anymore, because about 40% of Americans right now own their home free and clear. Oh. That's a data I was looking at. And the rest of the 60%, half of them have about about 50% of the value of the home. Like the value of the home is 500,000, they only owe 250. So in that economy like that, we're not gonna see any foreclosure, because those folks do not want to lose their home. Oh yeah. Because they have a lot of investment, a lot of money, sitting in the home. And another thing you can use your home equity for is, you're a homeowner, you've lived in your home for, I'm gonna share this story. So it was one of my past clients. I mean, they live in their home for like 15 years, a long time. And they've grown, family have grown, more children, their parents started to live with them. And they're like, okay, this home, number one, is too small for us. But they have no idea how they thought, oh, it's our home, we're in this home, we're just here, stuck forever. No, when we met, and I was doing a mortgage review with them, and they told me, I started asking that question, do you still love your home? They're like, unfortunately, the answer is no. I don't love my home anymore. We've outgrown it. We want more, we want a bigger space. We want, our current home doesn't even have a pantry. It doesn't have a garage. We want a new home. So, we're able to look at the equity they built over 15 years. It's almost $200,000. It's like $185,000.
Wow.
So what they were able to do was take the, because they didn't want to sell. They thought it was in a good area that they can rent it out. So they took the equity out, used it as down payment. They used about $150,000 as down payment on the new home, and they rented that property out. So why did they do that? I mean, now they're living in their home that they love, and the previous home they rented it out, so it's cash flowing for them. Their mortgage is so much less than the rent they're getting. They're cash flowing almost about $800 on their home that they rented out, and now they're in their home that they enjoy and love with their family. Wow. So you don't love your home anymore. Don't think you're stuck. You're not stuck. You can sell that home. You can buy another one. The equity you built, you can transfer it to the new home.
So, yeah, I think the most important is for them to take care of their credit.
Yes.
Because what I've realized is that a lot of people buy a house, and as soon as they own their home, they think they don't need their credit anymore.
That's right.
But credit is very, very important. If you think you love your home, or even if you don't like the house and you think you want to move out, the best thing you have to do is to start working on the credit. Absolutely. If the credit is not good, work on it right away.
Absolutely.
Make sure you fix it, or you pay your bill on time. sometimes it's very difficult, but so apart from using the home equity to buy another house, there anything again that you think they can use it for? Yes. And then if they need, let's assume you are a loan officer, right? Some people will think, oh, if I'm buying a house, then I have to go to Fola. But if I need home equity for something else, then I don't need to go to her. So I just want you to let them know, is it possible that if the person doesn't need to buy a house, but they need to get the equity out, can they come to you? Or
yes, absolutely. That's part of what we do. Main mortgage, your equity loan, your refinance. So I have some folks that they've lived in their home for a long time, and they like the location, they love their home, but they just need to do home improvements around the house. They're like, yeah, we've been here for a long time, we want to have a different flooring, we want to change the the bathroom, we want to change this. So we can actually get this same home equity line of credit that we're talking about. We can take it out, and you can use it for your remodeling of your home. So that's another need that, and once you put it in your home, I'm sure James can tell you that the value of your home, will definitely go up. So
yeah, because some people sometimes they don't really know, and then they just run around, try to find a way to get money somewhere. They use their own, personal credit card. Which I know home equity interest rate is far more better.
Yes,
than
much better.
Credit card.
Credit cards.
So,
absolutely.
Okay, folks, this is Jim Fremson podcast. Today, our program is real estate awareness with Fola Badewa, a very, very good loan officer in the Twin Cities. So, if you have any question, it's not about even home equity or whatever it is. If you want to buy a house, if you want to buy a commercial building, if you want anything related to real estate, just contact her. She is so amazing. Let me give you her phone number out there. Her phone number is 612-423-5847. 612-423-5847. And then don't forget to order the book. This book is really, 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 sometimes even you own your house already, you bought, but just read it, and there are so many things. Sometimes I want to talk to business owner. I'm a business owner myself. I don't receive W-2s. Sometimes we tend to write off almost everything. Is there any advice to small business owners out there who are willing to buy a house and don't really have income or whatever it is. It's not that they don't have income,
Yes.
but sometimes expenses they
Yeah.
write off almost everything. Is there anything that you know you want to
Yes.
share with them?
Absolutely. Yep. So if you might be a current homeowner and then need to buy another one, or you're self-employed and you need to buy a house and you keep telling yourself, my tax returns cannot get me a house because I know that, you know, I made all this money, but I write off like everything else. I made 500,000. My write off is like 495,000, and I only pay taxes on $5,000.
Mm-hmm.
Guess what? That 5,000 is the income lender is gonna use for you. They will not use the 500,000.
Yeah.
Because that's how much you pay taxes on. Just similar to, they just want to make sure that it's apples to apples. Someone that have W-2 income and they make $50,000, before they receive their paycheck, they've removed the taxes. Mm-hmm. So at the end of the day, they pay taxes on all the income. So if self-employed person now want to say, okay, this says they only 5,000, I want to pay 500,000, then that becomes your income. But in the past, it used to be like, okay, we'll sit down with them, we'll plan it in 2 years, start, making sure you file your taxes right. But now you do not need to wait. There's a program called Bank Statement Program, Bank Statement Loan. What does that mean? If you want to buy a house, you need three things. Always remember that: your credit, your income, and your assets, your bank statements that show how much you're bringing to closing. Mm-hmm. So your credit, of course, will be good with this bank statement program. 640 is the minimum scores. And then your income, instead of using your W-2 or your pay stub or your tax returns, we will not need any of that. We will not need that. The only thing we will need is 24-month bank statement.
Is it the same as stated income?
This one is not stated because we see how much you're making on your bank statement. So it's just called bank statement product. That's just what it is.
Is it across the board or just only your company?
It's across the board, I would say. I mean, not all lenders have the program, but majority of the large lenders will have the program. Oh. If you go to a small company, like if you want to go to your bank, I'm sorry, they will not have it. Yeah.
If you want to go to your local bank.
Yeah, local bank, they won't do that because they will only do conventional and FHA for you. Okay. So you will need a correspondent lender like us because those are the ones that will have this special program. So the way lender look at that, we will look at how much is coming in every month, how much is coming out, and they will do the average over the 24 months, and and once that income is set and your credit is good and you have money to close, you can get pre-approved and look for your home and then close on your home using that income from your bank statement.
So can you use that income to purchase commercial property?
So commercial property is different. They look at your financial for like 3 years. That one is totally different.
Yeah. And then this stated income, you said they need 24 months, right?
24 months bank statements.
Okay. Yes. So what about if the person, let's say I filed my taxes and then they didn't write off anything, I have the income. You have the income, yep. Do I have to use 24 months
in
or that case, one? How many?
In that case, we will just use your tax returns and then just show your funds to close. So your tax returns in that case, it represents your income. Okay. So it will just be your credit, your tax returns, and your 2 months bank statement to show how much you have to put down. Okay. That's it.
Oh, so they, instead of using 24 months, that one will be just only 12 months or
no, 2 months. So in that case, if you have income on your taxes, you already have income. We don't need anything else. We don't need alternative, income anymore. You already have the income on your taxes. So we don't need no alternative income. So the 24 months bank statement, that's alternative income because there's no income on taxes. Okay. It's alternative income. So Once we can document your income through your taxes, you're fine.
Oh wow.
You're fine. Yep.
Wow.
You're fine.
Wow.
You can purchase your home using that. Absolutely.
Okay, folks, please, this is really good information. I have no, I mean, this program, the new one that you're talking about,
Yes.
is something that is new to me.
Okay.
And
Yeah.
I would advise those home health agencies.
Yes.
If you own a home health agency or any business and then looking to buy a house or looking to buy something for your business, I think just try to contact Miss Fola and then order the book. You know, I just want you to know, because you know it's a very good book. You know how I cross loans sometimes.
I'm glad that you took time to read it, because it's 25 really, years knowledge in that book.
So it's really good. Okay, so how is the market? How is the market going right now? Do you have anything? Those who are really thinking about, oh wow, should I buy right now, or what should I do? You know, do you have any information for them? Or
yes, I do. I do. For the folks on the fence, the folks that just think, oh no, why will I buy right now? The economy is just going up and down, and we don't even know where it's going. I will always say, if you are renting, it doesn't matter what the economy is doing.
Yeah.
You're already paying 100% interest
even you
rates.
pay more.
Yes.
If you're renting, think about it.
Yes.
You will pay more.
Yes.
The owner will make sure that you pay his mortgage.
Exactly.
You pay his taxes.
An extra.
You pay everything. And then at the same time, pay extra. For cushion. They use it as a cushion.
Yes.
So
absolutely.
It's very good for you to just think about buying your own house. Yeah.
Absolutely. Think about buying. You know, the rates, I mean, it's rocky right now, but I'm telling you, rates at some point in the 1980s, they were 18%. Folks own a home at the time.
Yeah.
You know, so one thing you should know about rates when you're closing your loan is, when you do a fixed rate mortgage, that rate will never increase, but it can always go down. It can go down. Once rate drops, you can enjoy a refinance. Take the lower rates and then the lower payment. So that's why whatever the tariffs is doing, the rate is doing, stocks, bonds, I will say, don't renew your lease. Target the time that it expires, or see if talk to your landlord if you can actually break the lease. Some landlord will say, just give us 2 months notice and you can break the lease. So do not renew your lease. Make sure you have a consultation about homeownership. Where am I at? What do I need to do? What's the next step to reach my goal? And that's where James and I are, to help you navigate that journey to your home.
I mean, it's very important, because renting, I remember, I think I said this before, when I came to this country, I rented almost about 5 years. And when I bought my house, one day I was sitting down and said, let me calculate how much
you pay. Whoa.
And I nearly cried. I said, oh my God, I paid all this money to rental company. So, I mean, if you don't have the income, then it's different. But if you have the resources, you think you can afford to pay the mortgage, then don't waste your time, buy. Because there's no, when it comes to me, I tell people, I said, when it comes to owning a home, there's a better time. There is none. I remember when the market crashed, that was in 2010. Was it 2010? 2007. Yeah. Houses were just cheap. Instead, people were saying, oh, it's not time to buy, because, I said, I remember there were so many people that I talked to, and then they said, no, it's not time. housing market is too bad. I don't want to buy. And then when the market turned around, and then the prices started going up, is then that they said, "Oh yeah, if I knew, I would have."
I would have invested.
So
yes, absolutely.
There's no time to buy, even
not.
if the interest rate is too high, and you think you can afford.
Yes.
You can afford. Then it's very, very important for you to invest in it.
Absolutely.
If the interest rate goes down, you do what? You refinance,
Absolutely.
as you said.
Absolutely.
You refinance and then drop the payment.
Yep.
So owning a house is one of the things that but there are some people out there to always try to argue, oh no, owning an apartment is my apartment. I don't pay light, I don't pay heat, I don't pay water. Heat and water is what?
How much is that?
Yeah, how much is that?
Compared to the equity you're gonna build over time.
Yeah.
It's not comparable at all.
Because you don't buy a house and lose money unless you mess up yourself.
Yes. Absolutely.
If you mess up your credit,
yes.
You mess up, you don't pay the mortgage, yes, of course, you lose money. Yeah. That would be very bad experience, but if you do everything right, there's no way you will lose. Absolutely. At the end of the day, you'll end up getting more money. I remember some time ago, I don't know if I said this, when I started real estate, there were some people that I helped. At that time, the housing market was very cheap. Yeah. So I helped them purchase some houses in Brooklyn Park. Some paid $99,000, $89,000. Wow. And those homes are now $350,000. Wow. And this family is always, happy, So there's no really bad or good time to buy. If you are ready to buy, just go ahead and then buy. Yes. Go ahead and buy. You buy it, you move in with your family, and you think that is your assets. When they talk about American dream, it's not just based on owning a home alone, but it's part of it. Absolutely. It's part of it. So absolutely. I think it's something that if you're watching the video, pay attention to it, and then forward this video to your friends. Share if you see it in your page, Facebook, YouTube or TikTok. Just forward it. Forward it to your friends. Instagram. Forward it to your friends. Let someone who want to, maybe don't understand home equity. Exactly. Let them just listen to this thing and then, just see if it will benefit them. Yes, absolutely. If it will benefit them. So, folks, this show is Real Estate Awareness with Fola Badewa. Very, 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 I keep on saying this, very, very great loan officer in the Twin Cities. So do you have licenses in different states?
Yes. So the company that I partner with, Guaranteed Rate Affinity, we actually are national lender in all 50 states. Okay. But personally, I can, help families that live in Texas. Okay. And also in Atlanta. Okay. So I own those two other licenses. So if you're planning to move there and you're like, wow, I know James here, or I know Fola here, I can help you, and James, can refer you to a realtor there as well. Oh yeah, I mean I do it all the time. Sometimes I refer people to New York. Yes. I refer people. The last time I referred someone was in Kentucky. Okay. Yeah, because the person called me and then wanted to find out if I can explain everything. Actually, this individual is a Ghanaian. Okay. So he called and I wanted to find out if I can talk to him. I spoke with him, I explained everything, and then I ended up calling real estate agent over there with Coldwell Banker. Okay. Yeah, I refer. And then, they did really,
this is almost about 4 or 5. I did one in Rhode Island too. So
Yeah.
I mean, if you live in any of the 50 states,
yeah, we will
and
connect you.
yeah,
Yes.
just
Yep.
call to
Absolutely.
see. We are here to help.
Yes,
You know, we are here to help. If you are out of the United States, then don't call because
Actually, I take that back.
Oh, really?
I have a product for people that live outside of U.S.
Oh, really?
We actually call it foreign loan, and that's one of the benefits of working with the correspondent lender like Guarantee Rate Affinity.
Mm-hmm.
So it's a foreign loan product that if you put 25% down, you don't need to live in the U.S. You don't need to have social security number. All you need to do is to provide that bank account that you will bring your 25% down from. So it's a foreign loan product. We've helped a lot of people from Canada, from Nigeria,
So
from London.
you
You can invest, and it has to be your investment property. You have to have a home where you live, and this will be investment property. Putting 25% down.
So let me ask you. This might draw a lot of attention, but my question is: do they have to have a special visa to come here, or how would they come? Because let's say if I live in Ghana and then I have money,
yes,
and I want to buy a house in Minnesota,
yes,
I'm not U.S. citizen.
yes,
I don't have any permanent resident. How can I just make it work?
yes.
Do I have to do I have to contact you for you to link the person, or maybe show the person how to get a visa or something? That is something that I really
Yeah.
don't know.
So in the past we used to say we need to show your visa that you're able to come here, but there is different investor right now that we have that you don't even need to be able to come here, because there's a lot of property management.
I mean, I
here.
do. If you live in, if let's say
Yes.
you are in Nigeria right now and you want to buy, or you live in Ghana, South Africa, anywhere, and you want to buy a commercial property, I mean, you can just call, because I know it's part of my this. But what I believe, or what I know, I remember we had a meeting about it, and what I thought was you're supposed to have certain amount of money in your bank account. Is it 25%?
25%. Yeah, 25% down plus your closing costs.
So let's say if I want to buy 500,000, the only thing is I need to have 25%.
25% down payment and 3% closing costs.
So they don't require any extra money in your bank account, just to show in case you want to move here or something like that.
So that's the main thing you have to have is your down payment and your closing costs.
Closing costs.
Yes,
wow.
And your closing costs.
Wow. Okay. Yeah, folks.
Yeah.
So if you live in anywhere and you want to come to US, you have money, just make sure that you have the dough.
Yeah. It's about money. You got your money. You're able to invest here.
Yeah, it's about the money. If you don't have the money, don't come with.
How much is it right now that if you have that money in your bank, you can actually be a U.S. citizen? How much the president talked about?
That's 5 million.
5 million. Ooh, okay.
Yeah, president's card. Special card.
President card.
It's no green card. President's card. You have to have $5 million.
$5 million in your account.
But I think before it was
500 or so.
500,000.
Oh yeah, it was really low.
Yeah, before it was
really
500,000.
5
million.
So is that 5 million?
Right.
They really want to cut off a whole lot of people.
Yeah.
Like, okay, not everybody will qualify.
You see, our president is a businessman, right?
Absolutely.
You don't joke.
Absolutely. Like, bring money here.
Bring money here. Okay. Yeah. So I think so do you have anything else for us to just go over, or
I know we've said a lot. We don't want to confuse you or just bombard you like, oh my God, this is a whole lot. Here's one last thing I'm gonna tell everyone that's watching. If you're thinking that you want to make any move out of what we just talked about, you need to reach out. DM us, DM James, DM me. We will reach out to you and be able to sit down with you and actually talk through, help you think things through. Even if you don't know, you're like, oh, I don't know if I want to rent my house out or sell, or we will help, we will sit down and look at your current situation and be able to advise you and map out a plan to reach your goal. So please don't be silent. Reach out and we will help you.
Yeah, okay. Yeah, so we are going to end here with this segment, but I think we have so many programs we
So
will
many,
talk about,
so
right?
many, so many.
So
So
don't
many.
just watch the videos all the time on YouTube, Facebook, and then TikTok, Instagram. If you come across the video, pay attention to it. We educate ourselves. We make sure that we help you succeed if you want to buy, because sometimes savings is really good. A lot of people can save, but those who cannot save, owning your house is one of the things that will help you to manage your savings for future. Okay, folks, thank you so much. Think we will see you again.